Cenovus stock has been rallying hard, as oil and gas prices and cash flows soar. Cenovus Energy is the third largest Canadian oil and gas producer. It's also the second largest Canadian-based refiner and upgrader. But why has Cenovus stock rallied so much in 2021? And should you buy after blowout Q3 results? Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. I will have my own Patreon for my inside trading and stock in buying and selling. Subscribe to our channel so you will never miss out. Cenovus Energy stock, a solid Q3 as the oil and gas bullish cycle continues. This oil and gas company released its Q3 results this morning. Certainly, these are results that have gotten investors excited. They reflect the riches that are being made in the oil and gas sector. They also reflect that the oil and gas boom has only begun. Comments from management on the Q3 earnings call were bullish. In fact, I haven't heard this optimistic tone in oil and gas CEOs for a very long time. The positive fundamentals in oil and gas keep building. In short, the momentum is strong. Take a look at Cenovus's stock price over the last few years. Essentially, the stock has risen from a severely undervalued state in 2020. But it's only beginning to reflect the positive reality that it is enjoying. The third quarter of 2021 was positive on all fronts. For example, cash flows are soaring. In fact, cash flow from operations increased almost 200%. More importantly, adjusted funds flow increased 475%. This comes as oil and gas prices continue to soar. Cenovus stock looks good as its dividend doubles. Along with the Q3 earnings release, Cenovus announced that its dividend will be doubled. This brings its annual dividend to 14 cents per share, which translates into a dividend yield of just under 1%. Not a high yield, but certainly moving in the right direction. Cenovus is pumping out cash flow at an impressive rate, free cash flow of almost $2 billion in Q3. With this, debt is being slashed and shareholder returns are rising. Clearly, this $30 billion oil and gas company is finally seeing its day in the sun. The fundamentals of the oil and gas industry are very positive at this time. And with the energy shortages we have seen in Europe, I think it's becoming clear that we will need oil and gas for many years to come. Given Cenovus's long-standing record of operational excellence, this company will clearly take good advantage of these booming times. Give us a like if you like our video, subscribe and ring the bell to never miss out. Stay tuned for our upcoming Patreon account for an inside look on what will be the best buy and sell stocks every week.